Welcome back. Hope you feel refreshed after your comfort break. We have a lot to get through. First of all, I would like to discuss the history of money. I will just throw this question to you. What do you understand by M1?
It's the main motorway orientated north-south within the UK.
You brought a smile to my face, Steve.
A category of the money supply that includes all physical money such as coins and currency. It also includes demand deposits.
Excellent description, George. Okay, what is M2?
A category within the money supply that includes M1 in addition to all time-related deposits.
Very good, Tony. Okay, what is M3?
It's the broadest measure of money. It is used by economists to estimate the entire supply of money within an economy.
Another very good answer. I am sure Steve was having a joke with his motorway answer. Okay, I don't expect anyone to know, but what is so special about 1913?
The Federal Reserve Bank in the U.S. was created.
Well done, Tony. You are one of the very few that know that. I am now going to show you a clip.
In 1792, Thomas Jefferson adopted the dollar as this country's official monetary unit.
He looked around, he investigated to see what were the American people using as money, and that was the dollar. And so that's why that dollar became the standard of the United States.
Alexander Hamilton became the first Treasury Secretary, and in 1791 set up the first Bank of the United States as America's central bank to expand the supply of paper money for the benefit of the government and the commercial banks.
And how would you propose to establish international credit?
Our first step would be to incur a national debt through a national bank. The idea being that if the states owe Congress money, then other nations will feel more inclined to lend it to us.
If the states are indebted to a central authority, it increases the power of the central government.
You have it exactly. The greater the government's responsibility, the greater its authority.
Fractional reserve banking, and was later transported to the early American colonies. It formed the root of American commercial banking and ultimately the Federal Reserve System. The government's power to print unbacked paper notes would later become the pillar of the Federal Reserve System.
Quickly thereafter, Hamilton established a national bank, and of course, Thomas Jefferson came along and got rid of it. And then, of course, the Second National Bank came along, and Andrew Jackson, another gold-standard guy, got rid of that bank, too.
In 1907, when there was a run on some of New York's biggest banks, thanks to their fractional reserves.
At this time, the dominant families in the banking and business world were the Rockefellers, the Morgans, the Warburgs, the Rothschilds. And in the early 1900s, they sought to push, once again, legislation to create another central bank. However, they knew the government and public were very weary of such an institution, so they needed to create an incident to affect public opinion. So, J.P. Morgan, publicly considered a financial luminary at the time, exploited his mass influence by publishing rumors that a prominent bank in New York was insolvent or bankrupt. Morgan knew this would cause mass hysteria, which would affect other banks as well. And it did. The public, in fear of losing their deposits, immediately began mass withdrawals. Consequently, the banks were forced to call in their loans, causing the recipients to sell their property, and thus a spiral of bankruptcies, repossessions, and turmoil emerged.
In November of 1910, under the guise of a duck hunting trip, 6 men took a secret train ride to an exclusive private club on Jekyll Island, Georgia, to write a central banking act.
After this bill was constructed, it was then handed over to their political frontman, Senator Nelson Aldrich, to push through Congress. And in 1913, with heavy political sponsorship by the bankers, Woodrow Wilson became president, having already agreed to sign the Federal Reserve Act in exchange for campaign support.
Just before Christmas 1913, the Federal Reserve Act was passed by Congress and signed by President Wilson. It established a Federal Reserve System to oversee monetary policy and regulate the commercial banks. There are 12 regional reserve banks concentrated in the East and the Midwest. The Board of Governors of the Federal Reserve controls and coordinates their activities.
Any questions?
Yes. Who on earth runs the U.S., the bankers or the politicians?
A very good question, and I guess having seen that clip you know the answer.
I am afraid it is the bankers. The politicians are mere puppets. I did notice that Ron Paul was in the clip. He is the only hope for the US. He is a candidate for the president. He is honest, has a good track record, and not backed by multi-corporations.
I have never heard of Ron Paul.
Steve, you are not on your own. The mainstream media do not back him.
Unfortunately, the mainstream media are biased. That's why it is also important to watch the alternative media to get a balanced picture.
Does anyone know why there is a global financial crisis?
In a nutshell, too much money loaned into existence through fractional reserve banking, following the dollar being taken off the gold standard in 1971.
That's right. The truth of the matter is, money is debt. Too much money was loaned into existence, therefore, there is too much debt. It will never be paid back. A depression is guaranteed. Can you see on the screen how the public net debt has increased recently in the UK?
Wow.
That is a typical exponential graph.
Okay, we have now clarified our current financial position. After lunch we shall discuss the future global economic position. Enjoy your lunch.